Good morning, everybody, and welcome to the Gulf Intelligence Daily Energy Markets Forum webinar, where every morning in the Middle East we take a quick review of where the Asian markets have opened and what they're likely to do through the day. Let's kick off with Kevin Wright, lead analyst for APAC for Kpler. Kevin, welcome back to the table. Since you've been gone, the market's just gone upwards and upwards. So perhaps you should stay in your sick bed or wherever you've been. I was glad to see you're back up and at it. And how do you see this recovery now over the last few sessions?
Thanks very much for your wishes, Sean. I'm feeling much better. We were discussing before we came on air that it's bizarre that in these times of isolation, you can still pick up bugs and colds and various other things. So it shows that we're all human regardless of being isolated. Anyway,
well, that should be a good thing, right? It's sort of good old-fashioned flu, you know.
Yeah, exactly. It was nice to have a cold rather than anything else, you know. A cough without it being a dry cough that had me running to the doctor. But
yeah, exactly.
But if I'm out for a few days and this is what happens to crude, then the bulls in the market will be very pleased to see my absence, I guess, won't they? So, but no, I mean,
us not.
Yeah, but I mean, I think we're still seeing really the effects of the news from Monday. The world has got, I think, very excited. I mean, we saw equities across the board. Well, not across the board. There are a few sectors that are obviously hit because of the fact they've stepped in during the COVID sort of period. But equities generally had a real fillip on Monday, or Monday and into Tuesday. Crude as well, up 9% Monday, just on the back of the Pfizer announcement. So I think we're still sort of living on the back of that to a certain extent. And I think, the more news comes out, the more clarity we get around delivery times and the practicalities of delivery. Because I know I read about the storage conditions for this vaccine of minus 70 degrees C or minus 80 degrees C. Clearly, that creates a significant logistical challenge, a significant pragmatic or practical challenge. So, as time progresses, obviously we'll get more clarity and we'll get more news. But I think generally we're still reacting very much to the positivity. It's a bright spot for the first time in months for most of us, and therefore I think that the markets are reflecting that.
Rustin Edwards, head of fuel oil procurement at Euronav. I think welcoming Kevin's sort of optimistic comments there. But nonetheless, I think good old-fashioned inventory draws are what's also helping this market. Yesterday, we saw API report a sizable number. What are your thoughts?
Well, stock draws have been coming down the pike for quite some time now. I think we're into our eighth or ninth week of legitimate stock draws in the U.S. and same thing in Asia. One of the things that's interesting to see, though, is that the refining margin on the forward curve has been picking up in the distillate space. And this had been going on pre-virus announcement, vaccine announcement, excuse me. But even the vaccine announcement put some more juice into that fire. And so now you've got a forward refining curve that actually is starting to look very good. With that, if you can lock in those margins on a hedging basis, that implies greater crude demand down the curve in Q1 and Q2. Which is part of the reason why we see the...
Rustin, is it me or is it Rustin? It seems Rustin has frozen.
The front end of the curve on crude.
Sorry, Rustin, you froze there for about 20 seconds.
Strong forward refining margin on the distillate side is propping up the crude market. That's why the crude structures come in massively in the last couple of days, especially in the front end of the curve, because as Kevin said, great that there's a vaccine. You still have to get through the logistics of getting the vaccine to the population of the world. And production of vaccine, getting it distributed. I mean, we probably won't see wholesale vaccinations until Q2, Q3 of next year. But the market's reacting as if there's going to be a vaccine available tomorrow at your local pharmacy.
Yeah, which was, ultimately the second half of next year has kind of been baked in the cake for a while. It was, I suppose, still got a bit of a question mark on it. Dr. Carol Nachley, CEO of Crystal Energy, our correspondent in the Black Forest, welcome back to the table. Carol, there's been enough commentary out of OPEC this week to chew over. Anything in particular grab your attention?
Yeah, I'm going to add to the positive news that both Kevin and Rustin mentioned. I mean, it wasn't, Monday was quite good for the oil industry because it wasn't just the news about the vaccine, but also from ADIPEC, OPEC representatives, particularly the Saudi Energy Minister, His Excellency Prince Abdulaziz bin Salman, signaled that OPEC Plus is ready to tweak its deal terms as of January, depending on market conditions, and that they welcomed the increase in Libyan production. To what extent that is welcome, I'm not quite sure. But add to that, so already the OPEC Plus signaled that they may even cut further, deepen their cuts. And there was the Algerian energy minister saying before that they might even roll their current cuts of 7.7 million barrels a day, not by 1 month only, but by several months, well into 2021. Add on top of that the news about the vaccine effectiveness. I know all the hurdles are down the road, but at least it's a major breakthrough, and that's what the market has been waiting for. And ironically, this President Trump was actually not lying or telling the truth about the advent of a vaccine before the end of this year. And, you know, on top of that, you add the positive outlook for the economy. I know we're talking about a rapidly rising infection rates all across Europe, in the US. But again, if you look at the economic data, it's not as bad. I was looking at France 2 days ago, what the central bank said, that they're expecting perhaps a much slower economic growth in November than compared to April because of the lockdown, because we're not talking about the same severity of lockdown. So if I go back to ADIPEC and the noise coming out of ADIPEC, there is more optimism than pessimism. People are talking about rebound and recovery. But here I'd like to take the discussion one step further and say recovery is good, rebound is good, but then comes the big question, how sustainable that is going to be and how robust economic growth and as a result, oil demand growth is going to be after that. That will be another big question for a longer term discussion.
Kevin, I mean, it's been a battle of the halves, isn't it? In a way, glass half full, glass half empty. I mean, at the end of the day, we're still at half. It feels like we can easily tip between the two, and this week it happens to be with the half full glasses on as compared to the half empty.
Yeah, and you know, just sort of considering all of the points. I mean, you know, I mentioned sort of positivity around the vaccine. It's quite clear that, you know, the delays around the implementation or the distribution, etc., you know, are going to mean that the fillip for demand for distillates, for gasoline, and ultimately for crude, that's going to take a long time to actually kick in. What I'm sort of saying is there's a more positive sentiment in the air around it that's created that sort of opportunity. But I think, you know, as both Carol and Rustin have said, there's much more focus at the moment on the announcements coming out of ADIPEC. There's much more focus on what's happening with OPEC in particular. And I think as well, you know, as Rustin also mentioned, the crude draws in the States overnight were not insignificant and have continued a trend. So all of these things are very much glass half full. And they're within the context of that. I don't know, maybe it was just me, but certainly when I read
does it make the challenge for OPEC, Kevin, a little bit more complicated, where, you know, prices are firm, you know, have had a pretty firm bounce, and there's a number of reasons, fundamental and otherwise, but nonetheless, OPEC sitting on the doorstep of a major decision. Which way do they turn? Does this make it more difficult for them, do you think?
Well, I think that the way that OPEC has responded to the demand destruction that we've seen this year has been very responsible, been very, very smart, been very not reactive, but yeah, as I say, responsive to the situation. I think it's very unlikely that OPEC are going to take a sudden shock decision in December for January production. I think they're very, very aware of how fragile any price recovery is. And I think they're very aware as well, just like I said, that, you know, recovery related to a vaccine is 6 months to 9 months away. So any sort of increase in production would be very premature. And I think they're very aware of that.
Rustin, I was up early this morning thinking about you and saying, where can I find a story that Biden and shipping make their way into the same headline? I've seen refineries and OPEC, and lo and behold, I found a story that said, how will U.S. President-elect Biden impact shipping? It was just right there, bang. So I had to put it on the News Digest and ask you, is there any impact for shipping? What's the the sort of outcome of a Biden presidency? We kind of know what it is for the green and for climate and so forth. Any particular issues for shipping?
Well, I think the Biden administration most likely will ratchet down some of the rhetoric that's been placed against Venezuela and Iran. So we'll probably see an attempted renormalization of business relationships between those two countries, almost going back to a Pax Obama, where we might see the Iranian sanctions get pulled back to where they were pre-Trump presidency, and Venezuela will get some relief as well, which in the end will mean more crude and more oil on the market to move, which should be actually fairly bullish for oil, for shipping in that matter. Iran and Venezuela could easily put another 3 million barrels of crude back into the market, and probably another 1.5 million of products back into the market that need to be moved around on dirty tonnage as well as clean tonnage. So I can foresee that happening. And with Biden re-entering the Paris Climate Accord, that could see further expansions in clean operations of vessels around the United States. Potentially a scrubber ban might come into play on a federal level versus at a state level, which then could impact those who made that as investments. But again, that's all left to be seen because he still has till January 20th before he becomes president.
Yeah. Carol, your thoughts on just picking up on that. The one country of the sort of OPEC the family that is slightly on the margins but coming back strongly is Libya. Iran and Venezuela, of course, remain very much outside the tent in terms of exports at the moment. But Libya is looking quite strong. And the headline in the Digest today that they wouldn't be joining any OPEC cuts anytime soon. How do you think OPEC navigates the marriage of these other countries back into their decision making as they go forward into the new year?
Yeah, I mean, there are three wild cards within OPEC Plus today. The three countries that you mentioned are the main ones, but I would say Venezuela and Iran are probably for the longer term for next year and even beyond that. But Libya is something that's happening already. Now, I have mixed feelings about Libya because they have a great potential. But if you look at the past trends since the end of the civil war, if you look at their production profile, it has been really on a roller coaster. And it's primarily under the mercy of the peace agreement between the militias and the government, the official government of Libya. And if you look at the terms of the current peace deal, they are still quite shaky. And then Libya can fall back into unrest, and that will impact negatively its oil production. So that is one important thing to keep an eye on. The politics of Libya are far from being robust to make a firm bet that its production growth is going to be sustained for the several months to come. And there is the other issue which Libya's national oil companies has been warning of for several months, especially this year, which is the lack of maintenance for the infrastructure to produce and export oil production. And that will limit any further expansion. So it's always easy to do this kind of rebound because if you're starting from a very low point, then the recovery might look quite impressive and fast. But again, we go back to the central issue is whether this is going to be sustainable. And I have my doubts about Libya because the experience over the last few years and the last few months tells me otherwise. Now, assuming I am absolutely wrong, and I hope I may be for the Libyan people, then OPEC has to accommodate the return of Libyan oil production. I doubt Libya is going to concede and then accept to join any quotas immediately, even if its outlook looks robust, because, I mean, they need the money to sustain their economy. They need the money to establish political stability in the country. And therefore, other countries within OPEC, if they want to stick to their cuts agenda, and I think they will, then they have to compromise. And who is going to compromise? If you look at who is really driving the production cuts within OPEC, of course, all members are improving their compliance, but this compliance has been faltering recently, if you look at the data in October. And I think the burden will have to fall on the big players such as Saudi Arabia, and maybe within OPEC plus Russia, but I doubt about Russia's giving further concessions because they have not been compliant anyway, 100%.
I learned something today, which I didn't know before as I was driving the kids to school, and that it was apparently 11 of 11, which is today, is somehow some kind of a shopping day. Amazon or something does shopping today, and apparently will be very busy, hopefully. But the one thing I did know and have paid attention to the last few years, Kevin, is that there is a Singles Day in China, and it is, I think, either today or yesterday, and $56 billion was spent on gifts from people, single people giving other single people presents or something like that. But nonetheless, $56 billion spent. Surely China is back.
Yeah, it's a very positive sign, isn't it? I mean, that number grows every year. I've been aware of Singles Day for a few years now. Probably being out in this part of the world, it's a bigger phenomenon, and it continues to grow. I mean, I was having a conversation with Matt Stanley actually yesterday, who's one of your frequent panelists, and we were
trying to convince you to support Arsenal or something.
He's got no chance. I'm a Derby fan.
Back, I swear, Arsenal is back.
Well, they were back until they got beaten by Aston Villa last weekend, but that's another story.
Yes.
But no, Matt and I were having a conversation about the fact that, China effectively is its own demand, right? It's its own demand center. And we were looking more at clean products in particular, looking at clean product exports over the course of this year. Export margins out of China on a Singapore netback basis in October have fallen to sort of -$5.5, -$6 a barrel. That's gasoline and diesel. And China continues to import record levels of crude. So that just tells you that, and we track the inventories, as you know, it's part of my company's daily business. But that tells you that refineries are running hard. So that can only point to domestic demand. So Singles Day is perhaps reflective of a wider Chinese position, a wider Chinese development that, that China is back. China's demand is recovering or has recovered.
And is that an indication, Kevin, that it's clearly their policy to create a consumption economy that is less export dependent? Is that a sign of its success?
I think it's hard to look at it any other way. I mean, China can't exist. The Chinese economy is now so big that it can't exist independently. It does depend on the rest of the world for an outlet for all of the goods that it produces. But the domestic economy itself has grown to such an extent that, it's propping itself up. Let's put it that way. It's providing a greater proportion of an outlet for Chinese goods than perhaps it did ever before.
Rustin, in the glass half full, glass half empty scenario, what is the outlook at the moment for tankers and floating storage and other such things?
Well, right now in the front end of the curve, the market's fairly weak. You still need to have oil demand, and it's just not there. Refinery runs are still in the mid 70s, maybe low 80s in some areas, but they're still relatively low. So you don't have that pull of crude to get ships moving it, and you just don't have the supply there yet. However, on a forward curve basis, we've actually seen on the FFAs a fairly strong move up. I think there's a lot of anticipation that that Iran and Venezuela will get their sanctions relief and put more crude back in the market. Plus, on top of that, you've got this stronger crack that's happening down on the back end of the curve, which is implying that there will be forward crude demand. And so if those things hold true, then we could see a recovery in freight rates probably in Q2, Q3 from where they're currently sitting right now.
Carol, one of the things that I picked up on by Prince Abdulaziz was a sort of a brief comment, but nonetheless that the OPEC could move beyond just simply suspending the increase, but actually do more on the cut side. What is your outlook for that, and do you think it's needed?
Deepening the cuts may not be needed, but OPEC is trying to tell us that they are a responsible actor and they have been the one who have stabilized the market. So that's one thing that I would add to the statement that His Excellency made a while at ADIPEC. But stabilizing the market has not come cheap nor easy for OPEC because it requires a lot of effort, a lot of monitoring, more countries cutting more than the others to achieve the desirable compliance. So to deepen the cuts just at a time when perhaps the overall market sentiment is improving may not be the best strategic choice for OPEC Plus as of January 2021. There is, however, a higher chance that they might stick to the current cut schedule of 7.7 million barrels a day instead of putting back into the market 2 million barrels and therefore reducing their cuts to 5.7 million barrels a day. So that has a higher chances of happening in January, delaying the decision to put back those 2 million barrels a day into the market, perhaps for a month or for a couple of months. I mean, they did that in the summer when they extended their cuts by another month until they got better signals from the market. So that stands better chance than deepening their cuts, because as I said, I mean, they will have to convince various members to do that just at a time when there are more positive signals coming from the market that things are already looking better. So this is my feeling, but let's wait and see what they will decide by the end of the month, and then we take it from there to see what impact will that have on the market and what their own outlook is for the market for next year.
I mean, ultimately, one probably has to make a call on where gasoline and jet fuel are going to be going in the new year. But before then, let's have the survey question in the spirit of all things shopping. Will we see a bumper Xmas shopping season? So many economies and retailers and all of that world does depend heavily, a big half of their year, if not more, of revenue is in this cycle now, from now through to Christmas. Will we see that with European countries in lockdown, etc.? Will we see a bumper Xmas shopping season? Yes or no is my question today. And then we will go around the tables for closing thoughts. Kevin, we saw obviously the inventory drawdown yesterday. We're expecting the EIA numbers in today. This trend line does seem to be moving, and yet COVID is still a massive issue, and some headlines out of the US that we're just getting into the worst we've ever seen kind of headline.
Yeah, I was just actually reading one of the questions that popped up there that was talking about are drawdowns already featured in prices? I mean, I guess if drawdowns were already featured in prices, then prices wouldn't respond when the news actually comes out. I mean, companies like mine, put an awful lot of effort into looking at inventories, looking at patterns and so on. I think, what we're seeing at the moment, as Rustin said earlier, is not really a huge surprise. This is a trend that we've seen over recent weeks. And I think, almost despite COVID impacts on mobility and transportation and so on, I think we're likely to see a continuing draw.
The CEO of Vitol yesterday saying that it would be back to 5-year averages sometime, Rustin, in the third quarter next year.
On the inventory stocks.
Yes, that this momentum will continue, the drawdown.
Well, it will continue as long as we have discipline in the refining sector and they let margin come to them versus trying to push margin out. When I say that, I mean, if refineries start increasing run rates because they foresee that there could be a good value on the forward curve, they'll just keep the market on a flooded base because you still have people sitting at home. I mean, one of the biggest impactors to distillate demand in Europe has been the fact that people are sitting at home running their home heating 24/7, which is, people find that counterintuitive. Is that why is there bigger distillate demand in Europe now? Well, if I'm sitting at home in my house working from home, I'm not going to sit in an icebox. I want to make sure that my heat's running.
And would that be a little bit unusual because people would be all left their house for the day?
Exactly. Most people have dynamic heating in their homes where they turn the heat off from 8 in the morning till maybe 4 in the afternoon. Then when they get back from work, the heat's back on, and so they have heat for 7-8 hours during the day versus 24 hours a day.
And the heat is probably still on in the empty office as well, right?
Well, that heat, though, is a bit more dynamic in that it's probably large-scale heat being either powered by centralized boilers or by nat gas in a lot of cities. Your home heating in most parts is still oil-based, and that's where your biggest demand profile sits right now. So there is some demand in that regards. But I think that at the end of the day, we will start seeing it trickle back. Am I a big believer in Christmas? Yeah, I think there'll be a pretty good Christmas this year. And the reason why I say that is people have been sitting at home. They need a release. They need something to relax. And so I think you'll see a banner shopping year this year.
Well, let's go to the survey question and see if the room agrees with Rustin, and then get Carol view. Will we see a bumper Xmas shopping season? Yes, says 2/3 of the room. Wow, well, get out your credit cards and start spending on Amazon again. Amazon, buy Amazon shares. There's every day a new reason to buy Amazon. Carol, your thoughts, nonetheless, in the midst of all of this. I was actually having a conversation with somebody yesterday with my eldest son about, could we actually choreograph our Christmas party in which you would put people in little boxes and so on, but it's too much of a headache. Carol, your thoughts, closing thoughts, and on the back of that sort of little survey we did, the outlook for this coming economic period.
Yeah, I mean, I'm looking forward to start spending a little bit more money. The problem is that I forgot the pins of my credit cards because I haven't used them for a long time. But I wouldn't be surprised to see some perhaps unconventional buying spree, because you're sitting in front of your computer, you come across certain products, you might buy them, but still the impact may not be the same as when you physically go to do some shopping, because as you know, Sean, in case you are a big fan of shopping, my husband is surely not. And then when you go to do some shopping, you are not only going to buy specifically a certain product, it's the whole experience. You stop by in a coffee shop, you end up having lunch somewhere, you take the transport. So of course, it's kind of adds some optimism to the end of the year, but it's not going to be the same as saying everything's going back to normal. But I bet that this year we might see, I wouldn't just invest in Amazon, I would also invest in, let's say, companies that produce Christmas cards or greetings cards, because we might see more of that happening. So there will be change in the pattern of consumption. Yes, I'm expecting people to spend more than what they have been spending over the last few months, but it will not be the same impact as we saw last year, because it's quite confined to you and the screen of the computer in front of you. But
would you expect that with the European lockdowns, they all seem to be targeting unlocking in early December, ultimately, I presume, in order to capture the Christmas economic window. Does it feel like the European countries are on target for that will indeed happen?
I mean, it really varies across Europe. Here in Germany, I have the feeling it might happen, though restrictions will remain in place to a certain extent. In France, things seem to be a little bit more strict, and in the UK, it's all up in the air because they keep on changing their mind every week, perhaps. But that is, and my feeling was that the reason why they imposed these kind of restrictions in November is to allow some relaxation of the rules in December. But I doubt we're going to have a normal Christmas as we saw in the previous years. So yes, there will be some shops open, and here in Germany, actually, funny enough, apart from the restaurants being closed, I don't feel that we are in any sort of lockdown. I mean, the hairdressers are open, various stores are open, but it will vary from one European country to the other.
Okay, well, let's wrap it up there. I would just point out to note today, we didn't get to the geopolitics of anything, but US Marines landing in Taiwan for the first time in over 40 years just seems to be another part of the kind of irritant that is this whole issue around China-US face-off that could, in a stressed out last 70 days of Trump, maybe elevate as an issue that might not otherwise, but worth keeping an eye on anything that triggers that Taiwan issue. Thank you, everybody. Rustin, Kevin, and Carol for your insights and thoughts today, and everybody else. Have a safe, economically productive day, and we'll catch you later in the week. And draw your attention to our halftime talk interview with all things refining with this chairman of BAPCO. It'll be posted on the WhatsApp group now and on the Twitter in an hour's time. So please, when you have time, have a look at that. All the best.